Hey traders, this is Blake Morrow with Trader Summit. Make sure you join the most highly anticipated online free trading event of the year, October 21st through 23rd at tradersummit.net. We're gonna have so many great speakers for you for those 3 days. We have speakers like Danielle DiMartino Booth, Brent Donnelly, Mark Minervini, Peter Schiff, Danny Blanchflower, Helene Meisler, and many, many more. So make sure you do register, it's free. Also, our sponsor Eightcap will be giving away 2 iPhone 14s to 2 lucky winners just for registering. So what are you waiting for? I'll see you there. Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Dick Matthews back off of being sick from Pardus FX. Good to see you again, Dick, and I'm glad you're feeling better.
Hi, Blake. How you doing?
Good. Hey, markets are volatile. The sterling has bounced back a little bit more aggressively than I think you were thinking. But let's get into it. What are your thoughts here regarding the FX market and what you're seeing that happen in the UK and the bond market? The gilt market.
I think I'm still fundamentally want to be short of sterling.
Okay.
Basically, I want to be long in the dollar. So I want to be long in the dollar against everything. Sterling has bounced back. I think it's a good selling opportunity there. What are we now? 111.5-ish. So, anywhere I'd be getting short here. It's bounced back. What did it get up to? About 115, didn't it? I think.
Yeah. It got just above 115 right over here. Yeah. So
gets a bit dizzy up there.
Okay, so you like fading against that level, and why so? I mean, is the Bank of England, are they not going to be able to do their job? They're definitely providing stability. I mean, what they've done is stepped in at least for 2 weeks, right? And that created the bottom in the market. It also created a little bit of volatility in the gilt market, but with the sterling, I mean, do we give up on it? Does it eventually break?
I think it still eventually breaks down. The Bank of England's come in, try to put liquidity into, well, they have succeeded in putting liquidity into the gilt market. I think some people misread that signal and read it as a signal that central banks were pivoting and that the Fed would follow the Bank of England. Hey, that ain't going to happen. The Bank of England is just a real shadow of what it used to be. To me, someone described it as they're playing whack-a-mole with the gilt market. There's something happens, they're trying to hit it, and they're trying to put liquidity in. I smell a little bit of panic there, which I've never seen before from the Bank of England. The gilts have been trading almost like Bitcoin, which is bloody petrifying to think that 30-year instrument trades like Bitcoin. Yields want to go up here. The government's got a funding crisis, pushing yields up. Yields are going up in the US. Don't try and buck the trend. Let them go, smooth it and let them go. My concern is that there's something deeply amiss in the plumbing of the markets, certainly with the pensions and what pension funds have been doing with derivatives. And that's why the Bank of England's come in. And whether that's systemic risk in the UK or whether it's actually systemic risk elsewhere, and treasuries have a problem as well, I don't know. I don't know whether US pension funds have been playing the same games as UK pension funds. It makes me very, very nervous of what's going on in the markets. It takes me back to sort of like the Lehman Brothers days when you knew something is about to break. It just feels that it's about to break. Markets are looking for this to happen, I think, and are praying for the Fed to pivot when it does. I actually think the Fed's going to carry on playing hard. But that's my gut feeling. Again, I want to be short of sterling. I'm still looking maybe down to 110 initially. I tried it this morning. It traded just beneath it. A few stops got hit. But then again, I'm targeting certainly parity by the end of the year. The UK's in a real mess. The government's in a mess. The system's in a mess. So I'm very, very nervous there.
And I don't think we could, anybody's going to, argue that we're in a downtrend. The question is, was this low an actual, tradable low, or, the all-time low? Because the
Probably
previous low
wasn't,
was
was it? Let's be honest with it.
Yeah, well, and I guess that's the question. So you're still looking to sell strength, but how do you feel about the dollar, since you don't feel? And I mean, you look at the euro. The euro's, obviously not creating a new low on the year. So the dollar, it's stalling the dollar index ahead of new highs. How you want to approach the euro dollar now? I mean, it looks like parity is obviously critical here, because
parity seems like the top, doesn't it? Now
it does. It seems like that's what's capping us. Do you stay short while you're below parity, or do you think we're going to eventually break parity and then you buy the euro sterling? What do you think?
I actually am more bearish of the euro than I am of sterling. I think the geopolitical risks there are absolutely horrendous. I think that Putin got a bloody nose with the blowing up of the bridge, and he's going to hit back hard. I think he's going to really hurt Europe. You start turning gas off in Germany, industrial production is going to suffer. I think they're in for a nightmare scenario. They've got really high inflation, which you're not reading about, that they seem to be keeping this very, very quiet. So I'm actually more bearish of the euro. However, I do wonder whether you're going to see a little bump back in both sterling and the euro ahead of the CPI figures, just as people book square a little bit. And prepare themselves. Maybe the CPI isn't going to be quite as bad as people think, and you might just see a little better selling opportunities than you're seeing today, if that makes sense.
So maybe being able to sell euro dollar maybe up towards 99 cents or something like that, somewhere up in this neighborhood.
Yeah, I mean, I think that'd be hoping. I think 98.5, something like that, maybe.
Okay, well, so the bottom line, Dick, is you're still bullish on the dollar. You're bearish on the sterling, bearish on the euro, but you're just looking for better levels at this point.
Yeah, I think so. I just think it's a big figure this week, CPI.
Yeah.
One figure, as they say in the UK, one swallow doesn't make the summer. I don't think the Fed would pivot just on one figure. I think they're going to wait for a lot longer to see that. But I just feel the market wants a reason to sell dollar and take a bit of profit.
You talk to a lot of corporates, and you help. That's what Pardus FX does, is you help people, and their companies manage their FX exposure. I mean, where do you go? Where would you say in your mind, and if you're talking to them, like, look, I was wrong. We actually need to be long sterling down here or long euro down here. What would change your mind? What is on the horizon that would make you feel differently?
You ask me that every other week.
Well, I know I have to, because I want to know where your breaking point is, because I want to know where that's at.
Yeah, it's this famed Fed pivot that everyone is holding their breath for and looking for, and none of us will see it. We'll turn back and say, God, it happened 2 weeks ago. That's when the market turned. I don't think you're going to see it now until middle of the first quarter next year.
Okay. All right. Well,
I think that you see there's still some more upside on the dollar, and people forget that you still have this sort of safe haven attached to the dollar, and the world is a pretty unsafe place at the moment. I think that Putin's playing hardball.
At what point, and I want to ask you this based on your legendary experience of the FX market, at what point do you start buying Swiss francs? And I mean, at what point you go, I the whole balance sheet issue that the dollar has, and it's
I would start buying now.
But when do I start buying the Swiss francs?
Yeah, I'd be tickling a few away now, I think.
Oh, okay, all right.
I quite like the Swissy, and and it's always a safe haven from Europe. Money floods in there from Italy, France, whatever. So I'd sneak a few on board.
Well, as they come out of negative rates, it's like, wow, I could actually not lose money and just park my money in Swiss francs, huh?
But but the worry is, you look at these central bankers. I might be wrong. A year ago, the Bank of England was talking about having negative interest rates.
Yeah.
And people are now saying, they're going to, I think the meeting's on the 2nd or 3rd of November. They're going to put in interest rates up maybe by 1%. how wrong could they have been? You know,
Well, I
I
hear what you're saying, but Russia did change the landscape this last year. It's,
yeah, but they were still printing lots and lots of money, and you print lots of money, and it does tend to be inflationary.
This is a yes. That is what people tell me. So, all right. Well, Dick. Hey, I love our meetings, and I love sitting here chatting with you. But how do other traders find out more about what you do?
I'm active on LinkedIn. They can find me either through Richard Matthews on LinkedIn or Pardus FX on LinkedIn. I post on Twitter a little bit. Or they can contact me direct at richard.matthews@pardusfx.com, and I'm always happy to talk to people. And actually, 2 or 3 people have recently contacted me, and hopefully, I can build some good relationships and help some people.
Awesome. Well, hey, guys and gals, if you're listening at home, make sure, well, first of all, make sure you register for our Trader Summit event, October 21st through 23rd. Two lucky registrants are going to get iPhone 14s. We're raffling those off. Our sponsor, Eightcap. But more importantly, you'll be able to see a lot of great traders around there. And then make sure you subscribe to this channel, and make sure you give Dick a big thumbs up, because he spends his time with you. Hope you all appreciate it, and I know I do. So Dick, it's great to catch up with you this week. I'll look forward to next week.
All right. Cheers, mate. Bye now.
Bye.